Hi, good week to all. This is Calvin here again. Welcome to this week edition of the weekly technical outlook on the major indices that I cover: SPAX 500, the NASDAQ 100, the Hong Kong 50, the Japan 225, and the German 30 index for the week of 19th of July to 23rd of July. So before we highlight the key levels, the key technical elements, let's take a look at the disclaimer slides first. Okay, so let me quickly run through the weekly performance. This is something like a raw momentum of last week performance on the global stock indices across the world, from US all the way down to Asia as well as Europe, and compare it with its prior week performance and its prior 4 week average. So if you look at the S&P 500, in a couple of weeks ago, there has been the outperformer of the world. So, but however, last week, especially on Thursday and Friday, we started to see profit-taking activities across the board. That means we're talking about across all the U.S. major indices, from the S&P 500 to NASDAQ 100 to the Dow Jones, and especially the Russell 2000 that has been the worst performer at -5%. So the rest is still okay, uh, rather muted. I would say more profit-taking, close to a percent, where the Dow Jones average minus 0.5% for last week. So what we could see over here is a bit of concern going into the peak growth narrative. So what is this peak growth narrative I've been talking about in my social media tweets, pardon me, is actually related to number one, right now we may start to see softening of global economic indicators, okay, growth indicators like from PMI, all the way from let's say for example wages, and also we call it a capital investment. And because whatever we start to see the momentum that was actually being triggered, or I would say being more pronounced, that was seen in Q2 last year, where we start to be pretty much optimistic about the fiscal stimulus that is coming into the global economy, not even in US, but globally. But more or less right now, this fiscal stimulus, we call it effect or multiplier effect, has already started to fade. And we're now seeing a bit of peak growth, okay, and also coupled with what I call a potential demand shock being triggered by this ongoing COVID-19 Delta variant infection cases that is currently on the rise, that is seen globally from US, Europe, and even in Singapore. All right, so that actually explains that kind of concern about peak growth. Okay, but what's interesting over here on the highlight in this raw momentum table is the Chinese related stock market, which is the Hang Seng and the Hang Seng Tech Index. For the last week, they managed to close positive. In fact, they actually outperformed the rest of the world. Okay, at 2.41%. The Hang Seng Tech, where it just consists of Chinese big tech stocks, 2.49%. So if we could recall, in the last couple of weeks, the drag down on the China stock market has been pretty much pronounced or being led by China big tech stocks due to the ongoing regulatory concern that is being in place or imposed by the Chinese authority. Okay, then we have the Nikkei 225 almost unchanged, 0.22%. Prior week performance was negative 2.93. The 4 week average was almost less than 1%. So it's pretty much of a sideways range for the Nikkei 225. So very similarly for the German DAX as well. All right. Last week was actually negative 0.94%, almost the same as the US major indices. Its prior week almost unchanged, and the prior 4 weeks was pretty flat. Okay, so what we could see over here is more like also a sideways movement. So now breaking down on the S&P sectors performance, that means talking about the 11 sectors inside the S&P 500 index, what we could see is that due to the profit-taking activities that was seen last week, especially towards the end of last week on Thursday and Friday, it actually led to the outperformance of the defensive sector, which is the utilities and the consumer staples, which is up positive 2.5% and up 1.25%. So that is last week performance. And what we could see over here is that we've been highlighting since the start of this quarter is look out for this potential underperformance of the cyclicals, which is the industrials, financials, materials, and energy. All of them has been underperforming in the last 2 to 3 weeks. All right. So that more or less this cyclical underperformance has been play, and also now further reinforced by this peak growth narrative story that is being we call it kind of a driven sentimentally in the market in the last week or so. All right. Now, how about if I stretch it further to a rolling 1 month till 16th of July last Friday, what we could see is the top remains, which is the information technology, driven by high quality tech stocks. We talk about the US big tech stock from Apple, Facebook, and the likes of Microsoft also. Then we have a defensive healthcare, which is up 0.85%, then followed by consumer discretionary 3.6%. And what's lagging behind also, as usual, the cyclicals, which is the industrials, the financials, materials, and especially the energy stocks. Okay, so all these are previously outperformer in Q2 and so in Q1. All right, Q1, Q2. So right now the rotation, this is what I call a rotation play that is in play, that is tends to under favor or this cyclicals, which I still reckon it will actually stretch into the rest of Q3. All right. So now let's move on to some other interesting factors I want to share with you all is the market breadth, because I'll touch this market breadth because right now it starts to show very starkingly observation that I want to share with you all. So this is the actually the S&P. Okay, the S&P 500 market breadth, which I take the I would say the short to medium term trend rather than the longer term market breadth picture, which is the stocks at 20-day high minus stocks at 20-day low. That means I'm comparing how many stocks are making at 20-day high versus how many stocks doing 20-day low. So you could see over here is that since the start of July, this stocks at 20-day high minus 20-day low, which is represented by this green line, is actually showing lower high, which is called a bearish divergence. That means there are actually like a lesser stock making 20-day highs. However, the S&P 500 index going to do all-time high. Okay, last week, such all-time higher. So what we call this, what I call a market breadth bearish divergence. That means what we could see over here is that the cracks has been seen through market breadth. That means there are actually less stock participating to do new 20-day high, which is actually not very healthy for this ongoing medium-term uptrend. All right. Now, the next one, NASDAQ 100. Okay, so similar concept is the stocks at 20-day high minus 20-day low, represented by this green line over here. So what we could see over here is that also deteriorating. That means there are lesser number of stocks making new 20-day high versus new 20-day low is declining versus the price action of Nasdaq 100 that is surging to all-time high in the last week, 2 weeks or so. So what I could see over here is the market breadth has already started to actually decline or deteriorate in the S&P 500 as well as the Nasdaq 100. So that being said over here is that for this week, I'm actually pretty cautious of this ongoing medium-term uptrend that was actually in place since uh, late of May. Okay, late of May this year. This is the ongoing minimum uptrend. So what we could see right now is potentially it could be a potential final push on the S&P 500 and Nasdaq 100 to make another fresh all-time high before we start to do another what you call it potential multi-week corrective decline to actually terminate this ongoing medium-term uptrend, but the major uptrend that is in place since March remains intact. All right. So now, before I jump into the details of the technical configuration and the key levels on the various major stock indices that I tend to cover, let's take a look at the major events on the calendar for this week. All right. So for this week, a couple of pretty busy for this week. Let's start with the economic data releases first. So what we could see, what's important over here is I want to highlight is the China 1 year loan prime rate. So this is one of the key monetary policy tool, the one that is being introduced recently only last year by the PBOC, China Central Bank. All right. So as you know that last Friday, 2 weeks ago, the prior to last week, two Fridays ago, the Chinese central bank actually surprisingly cut the reserve requirement on their commercial banks. So a lot of market participants will watch whether will they tweak this 1 year loan prime rate, which remains the same for close to about for 14 consecutive months. All right. Then we have ECB interest rate decision, which is out on Thursday, 7:45 p.m. This is all Singapore time, followed by the press conference at 8:30 p.m. So what's interesting is that do keep a lookout, especially on the press conference, because the ECB president right now will actually brief the public on their new inflation target goal. Previously, they're actually targeting inflation slightly below 2%. Now they're targeting, pardon me, Eurozone inflation to be 2% and even they're able to actually run hot for a couple of time horizon. Means they allow inflation to go above 2%, like what the Fed is doing right now. So it's pretty key interesting to see what is their latest monetary policy guidance like on Thursday, all right, at 8:30 p.m. in the ECB press conference right after the interest rate decision. Then what we have over here is that towards the end of the week will be flash advanced PMI data across the world. Okay, we start off with the Eurozone first on Friday 4 p.m. Then you have both, it covers both the manufacturing and the services PMI. Then you have UK at 4:30 on Friday, and as well as followed by US to round out the week, which is at the advanced make it manufacturing services and manufacturing PMIs for the month of July. All right, so it's pretty interesting to see why is it so important, because PMI is actually the backbone of or one of the leading indicator of GDP growth. So since everyone is talking about the peak growth narrative right now, we've got to see whether the July flash PMI will start to show a bit of softness in as compared to 2 months ago. All right. Now, as you all know that this pretty month of July is pretty hectic on the earnings calendar, especially for the US, where they actually kickstart the Q2 earnings reporting seasons 2 weeks ago, starting from the bank. So for this week, we have a couple of interesting one to highlight is one of the big tech, US big tech will be Netflix will be announcing first on Tuesday after the close of the market. Then we have ASML, which is one of the leading US chip semiconductor stocks. Uh, on out on Wednesday before the market open. Then you have Texas Instrument, then followed by a couple of consumer discretionary related names like Las Vegas Sands. Then you have one that is related to private equity with Blackstone, more related to the tech space like social media or communication services, Twitter, Thursday after the market close. Then last but not least will be on Friday, will we have American Express before the market open, as well as one of the Schellenberg, which is a key energy related stocks, Friday before the market close. All right. So now let's now take a quick look at the technical charts. All right. So let me zoom into the technical configuration. All right. Oops. Okay. So let me start off with the daily chart of the SPX first. So what you could see on the SPX over here is definitely the key support level will be the in terms of the from a medium term perspective, right, will be this 4250, which is actually the former swing high area of 15th of June, and also right now the 50-day moving average that has been acting as a pretty nice support in every dips since 24th of March this year. All right, a bit of whipsaw previously in early March and later part the late January this year as well. But nevertheless, it's a kind of key support level to watch at least in the medium term. Okay, so what we could see over here is this ongoing medium term uptrend remains intact. That means we're talking about from the start of March, this year, March, from here, March, okay, early March. Because prior to that, you have a kind of a sideway. Then thereafter is we start to see a clear higher high and higher low. So perhaps it's a bit time to do a bit of consolidation from here. So what we could see over here is the RSI is now coming close to a support level. We also coincide with the 425 key support that we are watching. So if you look at the 4 hour chart over here, from the 4 hour chart, right, it's still inside this ascending channel in the short term from 5th of March. Okay, so that is actually the kind of so we go over here, right? Okay, so this is the start of the ascending channel, 5th of March. So what we could see over here, this is the ongoing medium term uptrend, close to 3 months already, yeah, give or take. All right. So what we could see now is coming very close to 4290 and 4250. Okay, 4290 is the last swing low of 8th of July. So what we are expecting potentially is also the 4 hour RSI is also now at the close to the coming close to the extreme oversold level. So I'm using 4250 as my key medium-term pivotal support, no change as of last week. So still looking for a potential final push up potentially to kind of a target this 4450/60 resistance level. Then thereafter we may start to see potentially the start of a multi-week corrective decline. Okay, for the S&P 500. Then how about the Nasdaq? Okay, so if you look at the Nasdaq over here, Nasdaq in terms of its configuration, it's still look pretty strong. All right. Not no big scare, higher high, higher low. The 50-day moving average is slightly higher at 4040, which is the former upside trigger level, now turns into a pullback support. RSI now is coming close to the first support level, close to the 50% level. All right. So now, if I were to look at the 4-hour chart, last week we have actually a first resistance or the first target at 14,950, 15,130. So give or take has already been met, printed a high of 15,003, give or take 15,000. So what we could see right now is actually now resting at the lower boundary of this short-term ascending channel since 13th of that was drawn from the low of 13th of May. All right. So what we could see right now over here is using this 14,480, which is the same medium term pivotal support that I have for last week. No change. Still looking for a potential final push up towards 15,000. There a break above should take us potentially towards the next resistance at 15,240 slash 15,300, which is confluenced by a bunch of FIBO expansion cluster level from various degree. Then from here, this 15,250 slash 15,300, this is where potentially we may start to see the start of a multi-week corrective decline. All right, for the NASDAQ 100. Then now moving on to the Asia indices, which is the Hong Kong 50. All right, so if you look at Hong Kong 50 over here, is still no change. Okay, it's still stuck. Last week, it attempt to actually push up from the 26,650 level, tested slightly above the 28,000 psychological level, printed a high of 28,180, give or take, yeah, 28,180 or once, yeah, 28,160, pardon me. Then thereafter, it started to dip down on late Thursday or late Friday, pardon me, or late Friday, yeah, Friday. It started to actually did a pullback over here. So, interestingly, where it stopped right now, if I were to do a FIBO retracement, it's actually 61.8% of last week's rally. Okay, take it from the low to the high. Okay, 61.8%. So it's actually stopped at this 27,360. So, but I don't want to actually place a very tight pivotal support at 27,360. I'll still use the 26,650 as my key medium-term pivotal support level. All right, so which is the bunch. So this level remains unchanged. So I'm still using this as my medium-term pivotal support for this week. So so looking for a potential another retest up again towards this last week's swing high, which is 28,160, a break above, only a break above 28,160, at least maybe perhaps what I could see on the daily time frame, because it's been pretty whipsaw in the last few weeks. So I'll use a daily close, given the last week pretty whipsaw action on the Hong Kong 50 index. So a daily close above 28,160 to actually reinforce a push up to actually test this 3 months plus of range resistance in place since early March this year. Okay, which is 29,320 slash 29,575. Okay, so still no change on the Hong Kong 50 index, still looking for that push up towards this range top, but provided it has you got to have a daily close above 28,160. Okay, holding above this key medium term pivotal support at 26,650. Now moving on to the Nikkei 225, all right, or the Japan 225, we call it in our platform over here. So for the Japan 225, right, it's a bit tricky in terms of because it has been this ongoing negative sentiment, especially the rising case of COVID-19 in Tokyo, actually coupled with the risk of a further spread some more, given the fact that Olympic is pretty soon in Tokyo, where we could see another round of a spike in case because we're talking about there is actually a global it's a kind of global event where actually put it away that it actually open up the land of Japan to actually outsiders. So the risk for definitely of having a spike in COVID-19 cases seems to be pretty much high at this juncture. So that explains the kind of a lackluster movement in the Nikkei 225. So what we could see over here is that last two last week right now is actually testing or challenging the 200-day moving average, which is all the key support that we've been watching at 27,500 in the last one week, last 1 month or so. So yeah, so it's a pretty challenging time for the Nikkei 225 or the Japan 225. RSI is at the oversold level, still no change. So what we could see over here is kind of trap between the range of 29,600 and 27,500. Okay, so it's a kind of very sideways complex configuration. since the 16th of Feb 2021 high, which is the 31-year high of 13,490 slash 13,716. So if I go to the strategy chart, right, if you could see here is actually testing the pivotal support again at 27,500. So what I could see over here is I will still use this level unchanged at 27,500. Looking for at least only a push up right now towards the high of 24th of June, which is 29,145, which now corresponding to this descending resistance that has kept previous recovery since the high of 16th of February, so since the high of 18th of March. So every time it tried to make a new high, this descending resistance actually kept it over here. So now it's acting as resistance at 29,150. But however, if we start to see a daily close below 27,500, game over for this push up where we start to see a further decline to actually retest 13th of March low, 13th of May low, pardon me, at 27,140. Then thereafter followed by the lower boundary of this kind of complex expanding wedge configuration, which is at 25,900 next. All right. Now, back to the Europe with the German DAX. So German DAX also said it's pretty much sideways flat since upon hitting the flash, not even okay, the this high here, 14th of June high at 15,805. So despite hitting an all-time high earlier this month at 30th of July, which is 15,816, it failed to actually have any positive follow through, and thereafter it started to trade sideways from here. So I'll give or take is a kind of a sideways range for close to about 4 weeks or so, about a month really. So what we could see over here is the support that you're watching is still the same 15,400 slash 200. The RSI is still testing this medium term key support at the 42% level. Okay, so if we were to go to the 4-hour chart over here, so what we could see over here is that I'm still using this SS pivotal as my pivotal support, 15,200 level that we defined 2 weeks ago. 4-hour RSI really now at the extreme oversold level. Still okay. Then thereafter, I'm looking more of a sideways player. So looking for a push up to actually retest this range top since 14th of June high at 15,810. Only a break above 15,810, at least a daily close, above, then we could reinforce another push up towards the next resistance at the 16,070 slash 200 level, okay, which is confluenced by a couple of Fibo expansion level and the top of this minor ascending channel as well. All right, so still looking for more of a pretty flattish configuration for the German 30 index as long as 15,200 holds, and we definitely need to have a daily close back above the range top or the range resistance since 14th of July 15,810 high. All right, so now to sum up everything is the medium-term uptrend that we start to see globally, taking the US major stock indices as a lead, the S&P 500 and the NASDAQ 100 that is in place since March, okay, March low, 3 months uptrend, is now coming close to a terminal point by showing certain sign of exhaustion, especially on the market breadth of the S&P 500 and the NASDAQ 100, which I covered earlier on. So this gives me a bit of concern, saying that this strength of this medium-term uptrend more or less is coming close to an end, where potentially for this week we could see a final push-up before the risk of a multi-week corrective decline unfolds for the US major indices, which is the S&P and the NASDAQ 100. Then thereafter, it could actually spill down to lackluster performance across the globe as well. All right. So with that, have a great trading week ahead, and I see you all next in my next video.